Welcome to ETF Market Insights, a weekly show focusing on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights, with the goal of helping you become an informed investor. Make sure to visit youtube.com/ETF Market Insights to watch previous episodes. And remember to hit subscribe so you receive a notification when we post new content and when we go live each Friday. Thank you for joining us today. Let's get started.
Welcome back to ETF Market Insights. I'm your host, Erin Allen with BMO ETFs. And today we're going to walk through a bit of a fixed income investing decision tree. So with many investors more interested in fixed income these days, given where we're at with rates, we're doing our best to spend a bit more time on the channel talking about fixed income. Last week we had Matt Montemurro on talking about discount bonds. And today we're going to walk through sort of those decisions that you would make, those questions that you would ask yourself in order to figure out where to position your fixed income allocations in your portfolios. So get ready. We're really going to get into sort of how to position that fixed income portfolio given your views on the market. Before we do get started, a quick reminder that we're not providing investment advice or recommendations. Today's show is all about providing education, as always, to Canadian DIY investors. And today I have the pleasure of being joined by Winnie Jiang, who's VP Portfolio Manager with BMO ETFs on the fixed income desk. Winnie joined back in 2021, but you have over a decade of experience covering both the active and the passive side of the investment industry. So welcome back to the channel. It's good to have you. And then I'm also joined by, nice to have you. I'm also joined by our partner Ravneet, who is Regional Manager from BMO Investor Line, who will join us later in the session to walk us through some of the latest offers and updates to the platform at BMO Investor Line. So to start off, I'm hoping, Winnie, you can give us an overview of why ETFs. Why are ETFs such an effective tool to help manage that fixed income side of the portfolio?
Yeah, absolutely. So ETFs are great tools to help manage your fixed income portfolio, as they really allow you to invest in a diversified portfolio of bonds in a single trade. And previously, investors would have to go into the market and buy individual bonds themselves. And trading these bonds were really complex, onerous, and investors were often forced to pay very high costs by way of wider bid-ask spreads. And you might ask why the bid-ask spreads are much wider when they try to source bonds from the market. And that's because fixed income is an OTC market, which stands for over the counter. So it's an inventory-driven, inventory-based market, much different than simply trading on exchange, like buying a stock or an ETF, which also trades like a stock. ETF have really brought the benefits and ease of trading on an exchange for the bond market. So now, like ETF have really level the playing field for retail investors and DIY investors by bringing you the institutional pricing and exposures. At BMO ETF, we provide investors the tools to segment their fixed income portfolio exposures by allowing them to pick and choose the exact exposure they want, whether it's a government or it's corporate bonds, or regional exposure like US, Canadian, or maybe even emerging markets. So, and we give you the option to different duration buckets as well, short, mid, and long term. So BMO ETF really have opened the door for choice and flexibility, and to what used to be a very challenging part for your portfolio for fixed income.
For sure, and I think it's amazing to just see how much innovation has happened within that fixed income ETF space, as you mentioned, from sort of that broad-based aggregate bond exposure, and now we're really segmenting it out, piecing it out so that you can make the call and position your portfolios. So great innovation for sure, but I think what goes into that decision in terms of what segment of the market to put in your portfolio is something that many investors grapple with, I myself included. So maybe so what we're going to do is we're going to walk through this decision tree piece. I am going to link the actual piece in the comments. So if you want to read it afterwards, just to solidify some of what we're talking about, we'll have that link for you there. It's also available on etfmarketinsights.com. So Winnie, what should investors consider when they're looking to make the decision, to start off between an active and passive exposure? Why would an investor choose one over the other?
Yeah, that's a great question, Erin. So traditionally, most bond ETFs were managed passively. Now, with the launch of active fixed income ETF in recent years, investors now even have more flexibility in their portfolio construction as they give them more options. An index-based approach can be more suitable for investors who believe the market is efficient enough and conscious about fund management fees, where active ETF might be used by investors who firmly believes in the portfolio manager's view, their capability to invest, and their specific investment process and style. So what's often misunderstood, as you mentioned in your question, is that active and passive is an either-or type of decision. But in reality, many investors uses both active and passive to enhance their overall returns. Active management can be complemented by using passive ETFs when an investor has some sort of specific view that they want to express, either is on interest rates or credit or even the macroeconomy as a whole. And given the segmented nature of our bond ETF product offering, investor can easily make active top-down decisions using our passive funds to get in and out of certain parts of the yield curve, credit sectors, and regional exposures. And also, a portfolio can be built using a passive core, utilizing aggregate bond ETFs such as ZAG, and select active managers as the satellite position to generate that alpha in more difficult to access asset classes. So Perfect. Again, it's important to keep in mind that the choice between active and passive should be viewed as more of a spectrum and not an either-or decision. The two management style really just complement each other by adding flexibility, and that's what we're trying to offer investors at BMO.
Great, well put. I think, yeah, it definitely comes down to how they can work together, and also, whether an investor believes in active management, maybe that's an easy call for them, or fees. If fees are utmost important, then of course a passive strategy is going to be less expensive. But I think they do work very well hand in hand for sure. And then depending on where investors believe we are in the economic cycle, are we in a slowdown? Are we in a recession? Who knows? But whether they have a call on that, they can actually position their fixed income portfolios accordingly as well. So what approach might investors take if they are, say, bullish or bearish on the economy?
Sure. So investors often position their portfolio according to their perception of the economy, and they should, right? So when the economy is in its expansion phase, so when growth is really robust and investor confidence is very high, people can look to increase their risk appetite by adding corporate bonds like high yield bonds and BBB rated corporate bonds, which are still investment grade but with a higher yields, to really enhance their returns. However, during economic slowdowns and early contraction phase, investors may consider, like adding some quality bonds and become more, as to become a little bit more nervous and want to be on the defensive side. So at this time, they can look to improve their portfolio credit quality by adding government bonds. At BMO ETF, make it really easy for investor by giving them all the tools, right, by way of segment exposure and flexibility to invest in the market in any sort of market environment.
And I love your thoughts as the expert. What are your current views, and how would you construct a portfolio today using BMO ETFs?
Yeah, for sure. So I think our economy is sitting at the slowdown phase of the cycle, with historical low unemployment rates and declining GDP growth. Economic slowdown and a possible contraction might be on the horizon as higher interest rates continue to squeeze and weigh on that corporate and household balance sheets. So with inverted yield curve and central banks may keeping rates higher for longer, I think it makes a lot of sense for investors to be a little bit more defensive now. And right now, I would overlay short duration and higher quality bonds, and having exposure to the short end of the curve means that investor can take advantage of the higher yield while not having to venture into the long end of the curve and take on unnecessary interest rate risk or duration risk, right? I really like our aggregate bond index ETF, ZAG. It's a great core building block with approximately 90% of the holding is A-rated and above. And that combined with ZST, our ultra short bond ETF, and ZQB, our high quality corporate bond ETF, to me is a perfect combo in the current environment.
All right, thanks, Winnie. And then investors can use the yield curve to make fixed income decisions as well, depending on their views of how the shape will change over time. But firstly, what is a yield curve? And then how can investors position their portfolio in relation to their expectations around rates as we go forward?
Yeah, so a yield curve is a line that plots yield or interest rate of bonds that have equal credit quality but differing maturity dates. The slope of the yield curve tells us how the bond market expects the short-term interest rate to move in the future based on the bond traders' expectation of economic activity and inflation. At BMO, we offer a comprehensive lineup across the term spectrum to help investors choose where they want to be on the yield curve. And in terms of how investors can position their portfolio based on their beliefs around the Bank of Canada or BOC rate decisions. If investors expect the BOC to keep rates higher for longer, they should probably stick to the front end of the yield curve. And that means focusing and overweighting the short-term bonds by utilizing our ETFs like ZFS, ZPS, and ZCS. However, if investors expect the BOC to pivot and be forced to cut rates, so interest will fall, and then they should probably add duration by buying the long-term government bonds like ZFL, as they're more likely to outperform when rates are dropping.
Okay, perfect. And then, of course, fixed income investments are impacted significantly due to inflation. What should investors who think that inflation is going to remain persistent really be considering when it comes to fixed income?
Yeah, so many investment instruments are impacted by inflation, and that impact is probably more pronounced in fixed income. Inflation reduces the purchasing power of the income generated from a bond. At BMO, we offer differing inflation protected bond ETF that allow investors to weather different inflation scenarios. For investors who believe inflation will be surprising to the upside, they may want to consider investing in inflation protected bond ETF such as ZTIP, ZTIP, or TIPS, TIPS, to protect their portfolio. And this should really help investors to protect their purchasing power. However, if investors believe that inflation will remain, around the same level as of now or to decline in the near future, then it makes sense for them to invest in regular government bonds instead.
Where do you think inflation is going, Winnie?
I think it's going to be going down, slowly trickling down, hopefully.
Okay. I hope so too. Tax is also, of course, a primary concern for investors who hold bonds, especially in non-registered accounts, interest income being the least tax efficient of incomes. But talk to us about the fixed income market and whether there are more tax efficient ways to gain access to fixed income.
Absolutely. So it is very important for investors to be tax aware and make appropriate moves and decisions accordingly. While it's true that fixed income is generally the least tax efficient type of investment income, there are ways for investors to maximize their current returns by being tax aware. Since coupon on the bonds tax as income, by minimizing coupon while still attaining the same return would really be beneficial from a tax perspective. For tax investors, they can look to discount bonds as a way to maintain their core or segmented fixed income exposure, but do so in a more tax efficient manner. As their strategy aims to minimize the coupon earned by investors, these ETFs such as ZCDB, ZDB, that will really help you keep more of your return in your pocket.
Right, so your taxed as interest on sort of that coupon, and then up to the yield to maturity is capital gains, and then
yes.
So you're really looking for sort of that lower coupon relative to the yield to maturity. And
Exactly.
for more info on that, I'm going to refer all of our viewers to last week's episode because Matt went deep into discount bonds. So if that is an area that you're looking to get a little bit more fluent in, I definitely suggest you check that one out. But thanks, Winnie. So that wraps up the fixed income side of this, Winnie. Thank you so much for all of your insights. We've gone through sort of how to take your views on the economy, around rates, around inflation, and everything in between, and how that may impact how you build your fixed income portfolio. I want to now turn it over to Ravneet. Thanks for your patience, and we're all eager to hear about BMO Investor Line's latest offers. So over to you.
Thanks, Erin and Winnie. Great commentary so far. I just wanted to introduce myself. My name is Ravneet Warrior, and I go by as Rav, the Regional Sales Manager for Investor Line, covering Eastern Ontario and the Atlantic region. Now, today we have two limited time promotions for our self-directed and our advice-directed platform. Viewers and participants can get additional information by going on bmo.com and selecting online investing, or feel free to send me an email. My contact information will be available at the end of our seminar. Now, if we take a look at the left-hand side here, we can see our self-directed promotions. Clients can enroll by using the promo code INVESTSMART when you go online and you open an account. You'll receive $4.95 per trade for the first 90 days of account opening, which will commence on the 5th business day of the next month. Promotion code INVESTSMART when opening a self-directed account. On the right-hand side here, we have our advice direct promotions, where you can receive up to $3,100 if you open and fund a new account using our promo code DIGITAL08. Fund your new account with at least $10,000 of new assets. Please also note the dates the account must be opened by and the funding dates. We also offer 80 commission-free ETFs with BMO Investor Line. A full list can be found on our BMO Investor Line website. Commission-free ETFs allow you to rebalance your portfolio, manage your risk, allow you to make tactical adjustments and regular contributions to take advantage of dollar cost averaging. Including our BMO ETFs, our commission-free providers are Vanguard, iShare, and recently added ARK Invest. We have an ETF for every investor. We provide 5 asset classes such as equities, fixed income, multi-asset class, thematic, and ESG ETFs at no commission cost. Again, a full list can be found of our commission-free ETFs can be found on our BMO Investor Line website. This is also a fantastic opportunity to discuss our active trading platform, which we recently launched for our 5-star clients. Our active trading platform is designed to help elevate trading using a new web-based platform interface. Clients looking to do more technical analysis will benefit from our new platform, as they will receive real-time streaming for level 1 and 2 market data, real-time streaming options for both stocks and options, and it will provide advanced trading methods with over 100 pre-built indicators and 30 drawing tools for you to do your own investing with technical analysis. Our 5-star program with BMO InvestPlan will give you access to our active trading platform, as well as other bells and whistles, including preferred interest rates, professional level research tools, not only on the technical analysis side, but also on the fundamental analysis. And you will have a dedicated 5-star support team. That way you can work with our best to ensure you're investing with confidence. Please don't hesitate to send me an email at ravni.waria@bmo.com. I would be happy to discuss more about our platforms and features. And just a reminder for our participants today, use our InvestSmart promo code for our self-directed account and Digital 08 for our Advice Direct account.
Awesome. Thanks, Rav. Thanks for that great overview. I appreciate it. And thanks again, Winnie, for all your insights around fixed income. Next week, we will have our quarterly banks podcast on the channel. So that's going to give you the latest around the bank earnings and a deep dive into what the forecast is there. So I hope you'll join us then. We'll see you next time. Bye for now.
Thank you for watching this week's episode of ETF Market Insights. To stream any previous episode of ETF Market Insights series, please visit youtube.com/ETF Market Insights. Remember to hit subscribe and sign up for alerts so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.